Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, March 8th or May 8th, and we got a couple items here to note for economic news releases. And we'll start off with the NFIB Small Business Index for April's numbers. We had 92.5 back in March, and it rose actually up to 94.5. So we're kind of small businesses, the indexes of the gauge is kind of reaching towards the top end that we've seen in a while. So small businesses are feeling a little bit better, at least in the month of April. So that's pretty good news here. And then we have job openings for back in March. So back in February, we had 3.57 million job openings, and that actually increased almost by a quarter million. So that's pretty good too. So more jobs are opening up for people. So that could be obviously, uh, help out the economy a little bit further. So that's kind of a good sign to see. As we all know, we need jobs to get the economy moving further. So just move over to the headline news here, and the stock market's down. The Dow's down quite a bit again today. It was down about 150, 160 so far this morning. And a lot of it has to do with Greece's inability to form a government, which is kind of rattling the investors. So they met another time with the new parliament, and they're trying to form the government, and nothing's came of it as of yet. And with the new people coming in, and especially when they're anti-austerity measures, it's creating a lot of uneasiness with the investors as they're concerned that maybe they might default on the bailout money that they've received, and or maybe have exit strategy plans from the Euro EC. So there's a lot of concerns that maybe are rising from there. And so this is kind of heightened. The news over on Greece and Europe is a little more heightened now, primarily because the corporations' earnings season's kind of done. Is kind of going into more cruise for the summer until we get to about the fourth quarter. So this is typically the time for earnings. It's usually a lot lower for a lot of corporations until we hit towards the fourth quarter. And so a lot of this, because we don't have a lot of economic news releases scheduled this week, you're probably going to see a lot more European news. So this could really kind of dictate the markets this week here. So let's take a look, see how this is affecting the bond market and what the interest rates are doing. So we're seeing another opening gap here, and it was about 6 basis points gap, and right now we're up another 6 basis points. We're up about 104.22. We're kind of seeing the highs of what we've seen here, so we're gonna be real cautious here, as right now we're hitting above the ceiling, which can become the floor. And if we can maintain that, it's possible we can see a little bit more, especially now with what's going on in Europe. Potentially, we can see a little bit better rates. Again, we haven't. We're reaching about the height we've ever seen before. So these are actually new heights we're seeing right now. But we do got caution. There is a few more opening gaps that we've had, as you can see by the arrows that I pointed out a few days ago. We had the gaps, and they have a tendency to close. At some point, we're going to have a bond rollover, so that could be the effect of the bond rollover. Maybe the bond rollover will come down enough where it'll close those gaps for us in the next coming days. So we could kind of see potentially something like that kind of happening. So right now, interest rates have improved. They're a little bit better than they were yesterday, and stay tuned. We'll see how low rates go. You guys have a wonderful day. Stop by mikesdailymarketreport.com. Sign up, subscribe, get your free emails sent to you on a daily basis. Have a wonderful day.